balance sheet or in the income statement? Is it in the balance sheet or in the income statement? It is in the P&L. So hii interest ya 4 month, interest ya 4 month itaenda kwa P&L. Interest ya 8 month utacapitalize. So sasa utakuwa unapeleka kwa balance sheet the cost of the building, utachukua 10 million plus the interest for the 8 month, hii itaenda kwa balance sheet. Ile ya inactive period, your interest utaipeleka kwa P&L. That is how you account for, in this case, the interest expense, the interest expense, the interest expense. So besema in this case it can be interest during the inactive period, ama inaweza kuwa hii building na njala hukuanza kuijenga Januari. Januari yote uli waste time ukitafuta mtu anaweza kujengea mtu mzuri. Na already ulikuwa ushapewa loan na bank, but huku unaamini wanaweza kupay your loan. Wakakushtua 1st of January wamekupatia. Hata wewe mwenyewe ukashtuka. Ndio kaanza kukimbia around. Natafuta mtu anaweza nijengea ni nani? Mtu anaweza nijengea ni nani? You spent a whole month. You never did any form of construction. So the construction started on 1st of February. So in this case, there was a pre-construction period. There was a pre-construction period of one month. That one also you don't capitalize. You don't actually, in this case, end up having to do what? Capitalize. You don't actually end up having to do what? Capitalize. Because January, it was inactive period. So kuna inactive period ya 4 month. If it happens, January huku jenga kitu yote ulianza February, then the active period of construction is not 8 month. It will be 7 month. Na huku in the start kulikuwa na 1 month ambayo tunaita pre-construction. So still, this interest in January, you can't include it as part of the cost of the building. You'll only be able to take 7 months because there was a pre-construction period of 1 month. And of course, in this case, there was an inactive period of construction of 4 months before the end of the year when the loan was having to be paid, was having to be paid off completely, was having to be paid off completely. So that's why in this case you account for it. So the interest during the inactive period of construction, inactive tunamaanisha huku unaendelea na mjengo, ulikuwa ushamaliza. You interest yenye inaendelea accrue on this loan, hautaipeleka kwa the cost of the building, utaipeleka kwa P&L account as an expense. But this one during the active period of construction, utaipeleka as part of the cost of the building. So utachukua 10 million plus that interest, sasa ile unapeleka kwa balance sheet. Uta include hapo as the cost of the building. But you also been able to say that in this case, you might realize you borrowed 10 million. But this 10 million, when you are doing construction, you normally pay these monies in phases. So the money will just be lying in the bank. So until by the end of August is when you spend the last coin of construction. So you realize that in this case, within the first 6 months up to June, I will only need, let's say, for example, 6 million. They'll be remaining how much? 4 million. Yenye nitalipa the last 2 months. You don't finish. They normally say what? Finishing of a building ndio inakula pesa. Hiyo ndio inakula pesa. Ndio inakula pesa. You've realized the first 6 months I'll spend 6 million. The last 2 months I'll spend only 4 million up to August. That is July and August itself. So this money cannot just lie in the bank. Wewe ni mjanja. Wewe ni mjanja. What you do when they give you the money immediately on 1st of January as a company, you invest in treasury bills at Central Bank of Kenya. You do an investment with the 4 million, which you know you won't need it between 1st of January up to June. When you invest this money, see, you'll get interest. You'll earn. Now you are earning. You're not paying, but you are earning. You'll earn interest on the 4 million. So that interest you earn, it is an income to you, but in this case, what you're having to say, you'll end up having to deduct it from this borrowing cost you had capitalized. And of course, when you do a question now, in this case, it a sink. It a sink. Utaelewa what you're having to say. Utaelewa what you're having to say. What you're having to say. So just the very final point before we look at an illustration, just the very final point before we look at an illustration, So if you start thinking so much deeply, is when in this case, you feel like you are not understanding. You feel like you are not understanding. You need to just unaiweka in the layman's language. Yani unaiweka in the layman's language. Usianze kutumia kizungu kubwa kubwa, utachanganyikiwa hapa. Usitumie kizungu kubwa kubwa, utachanganyikiwa hapa. Just interpret it in the layman's language. Hapo tu home. Hapo tu home umekopa pesa. Nini inafanyika? Nini inafanyika? So sometimes in this case, you can actually end up having to finance the same project from two different loans. So in this case, you were supposed to construct the building. Let's say, for example, in this case, a building of 10 million. Unaenda KCB, then you go to equity. So equity, they give you maybe 10 million at an interest rate of 18% per annum. Or they give you, in this case, 5 million, sorry. They give you 5 million. Equity, KCB, they give you 5 million at 18%. Equity, they give you another 5 million at 16%. So you can see you financed this particular project of 10 million from two different sources. Two different sources, not the same source of financing. So in this case, how do you capitalize? If this is the case, then you need to come up or basically compute what we call what? The capitalization rate. Capitalization rate. Capitalization rate. You need to be able to come up with the capitalization rate or the cap interest rate or capitalization interest rate. Capitalization interest rate. So you need to come up with the capitalization interest rate. That in a manner, you need to combine them and get an average. Get an average of how much will you be capitalizing as part of this 10 million to be the cost of the building. Because Ababu, you can see there was interest from different sources. There was, in this case, loan from different sources to get a total of 10 million. So KCB, they told you they can't fund you. So you had to go to equity. You get the other funding. But the interest rates are actually different. So you need to come up with a uniform interest that you'll likely end up having to, in this case, capitalize on this particular amount of the construction of the building. So in this case, to get the capitalization interest rate, then there's a formula that is normally used. In this case, you get the aggregate interest payable. What did it mean by the aggregate? You total. Aggregate interest payable. Aggregate interest payable. You divide by, in this case, the total amount borrowed. The aggregate amount borrowed, you divide by the aggregate amount borrowed. You aggregate amount borrowed. Aggregate interest payable, you divide by the aggregate amount borrowed. Aggregate amount borrowed. Aggregate amount borrowed. So that's why in this case you get the capitalization interest rate. If it happens you sourced for the funds from two different sources. So maybe in this case, to be able to get a better understanding, let's look at an example from the past paper. So tusikue tunaongelelea tu story ya Jaba hapa. In this case, let's now look at an example so that you understand what we are doing here. What we are doing here, illustration. So illustration, let's look at an illustration. Illustration, in this case, we're going to get it from the past papers, So open December 2022, question number 3B. December 2022, question number 3B. December 2022, question number 3B. Please inform me whether you can be able to access it so that we can move together, December 2022, question number 3B. December 2022, question number 3B. December 2022, question number 3B. So you need to get the past papers. There's a link in the group description. It has the past papers. There's a link in the group description. It has the past papers. Please, on the chat, indicate you've gotten that past paper. We need to move together. Make sure you print them so that when we come to class, it becomes very easy. It becomes very easy. The link is on the group description. And I've also shared these past papers you are looking at. Hiyo December 2022 nimeshare kwa WhatsApp. Unless Vero umejoin tu sahi, I don't know whether umeingizwa tu kwa group sahi. Mtu anaweza reshare hapo. Kwa group. Confirm whether we are together. Just confirm whether you've gotten that particular past paper. At least 3 or 4 people should be able to confirm so that we proceed. Otherwise, I don't know whether you have the past paper you don't have. So you are far much better off if you confirm you've gotten the past paper so that we proceed. And make sure when you come also to class, you have a calculator because these are computational unit. So usikuje tu umeng'esi hapo. Umeng'esi hapo, una calculator, una kitabu ya kuandika, una past paper. Lazima uchangamke, lazima uchangamke. Lazima uchangamke kwa hii unit. Lazima uchangamke. You need the past papers, a calculator, and somewhere to write. You need the past papers, a calculator, and somewhere to write. Otherwise, utabaki nyuma. Otherwise, utabaki nyuma. And we want, in this case, not to leave anyone behind. Debbie has gotten it. So Ezekiel, not yet. Ezekiel, not yet. So tumesema at least 3 or 4 people should be able to confirm. Mbuthia has gotten it. Mbuthia has gotten it. Another person, Mbuthia has gotten it. Alex has gotten it. Alex has gotten it. So December 2022, question number 3B. It says, Sayari Limited obtained 10% loan note amounting to 24 million on 1st of January 2021 to finance the construction of a new factory. As the funds were not all required immediately, Sayari Limited invested 10 million in 6% bonds until 31st of May 2021. Construction of the factory began on 1st of March 2021. However, due to an unexpected shortage of skilled labor, the project ceased during the month of July and August 2021. By 31st of December 2021, the project was not complete. The project was not complete. The project was not complete. Required. Explain with suitable calculations the accounting treatment of interest on costs on the loan note in the financial statements of Sayari Limited for the year ended 31st of December 2021 in accordance with the International Accounting Standard number 23. That is what? Borrowing costs. That is borrowing costs. Sasa hiyo story tumekuwa tukipiga, sasa ndo hii wameweka kwa swali sasa. You need to interpret what in this case we've been talking about here to apply to what is actually happening in this particular question. So if you go to the question, in this case, you've actually been told that Sayari Limited obtained a 10% loan note amounting to 24 million on first. So the loan was acquired on 31st of on 1st of January 2021 to finance the construction of what? Of a new factory. Of a new factory. So in this case, they borrowed the loan on 1st of January. That is 2021. So the amount borrowed in this case was actually 24 million. The interest rate per annum on this particular loan was, in this case, 10%. Was actually 10%. Was 10%. So in this case, inamaanisha, by the end of the year, how much is supposed to be interest that would have actually been paid on this loan? How much is supposed to be the interest that should have actually been paid on this particular loan? Hiyo ni rahisi, Cheburugei. Cheburugei, hiyo ni rahisi. The loan was 24 million. The interest rate is 10% per annum. It is 2.4 million. The interest that is supposed to be paid here is supposed to be 2.4 million on the 24 million. On the 24 million. Then in this case, you're having to be told, as the funds were not all required immediately, Sayari Limited invested 10 million in 6% bonds until 31st of May 2021. So tumesema unaweza pata pesa ile tulikuwa tunasema 10 million, hata zinakushtua. Kwani zimekuja haraka aje? Na huku umejipanga, hata huku umetafuta watu wa kufanya kazi. So hiyo pesa unaamua wacha ni invest kwingine. Una earn interest. So that is what Sayari did. They got the money, but of course this money, they realized this amount would be needed immediately, the entire of it. So they invested part of it. They invested part of it in what? In investments. So as the funds were not all required immediately, Sayari Limited invested 10 million in 6% bonds until 31st of May 2021. Construction of the factory began 1st of March. So in this case, we have the active period of construction. So you have the active period of construction and you have the inactive period of construction. So in this case, you're having to be told that So construction of the factory began 1st of March. So it means in this case, inactive period hapa tuko na, juu walianza walipata pesa 1st of January. January already walikuwa na pesa, but wakaanza mjengo lini? 1st of March. So it means in this case, inactive period, it was actually January na February. So that is up to that particular point on that statement, because they started on 1st of March. However, due to an expected shortage of skilled labor, the project ceased during the month of July and August. So still in this case, there's another inactive period, July and August, and August, and August. So it means the only active period in this case that was actually, for example, utilized in terms of construction, it was March up to, in this case, June, plus, in this case, also September, up to, in this case, December. This was the active period of what? Of construction. The inactive period, January na February hawakuwa wamejipanga, wakaanza kujenga 1st of March. So March to June wakajenga, but hapo katikati skilled labor haikuwa, wakasimamisha mjengo kwanza for 2 months, July and August. So it means the inactive period of construction during the entire year was actually how many months? 4 months. It was actually how many months? 4 months. The only active period was actually 8 months, which is this one. It was actually 8 months. The inactive period in this case was actually 4 months. 4 months. 4 months. 4 months. So according to what you've just been able to explain, so how many months are we going to, in this case, capitalize? Is it the 8 month or 4 month? How many month interest are we going to capitalize? Is it the 8 month or 4 month? According to what we've learned in class, it is the 8 month, because this was the active period of what? Of construction. So you have to, in this case, compute the interest for the 8 month, which will be able to include on the cost of what? Construction. The cost of construction of the building. The cost of construction of what? Of the building, which will be able to end up having to capitalize. So however, due to an unexpected shortage of skilled labor, the project ceased during the month of July and August 2021. By 31st of December 2020, the project was not complete. So by the end of this year, walikuwa bado wanaendelea kujenga. But for this current year, which they want us to account for, because that is what the examiner wants, in this current year of 31st of December, how do we account for this borrowing cost here, which is actually what? The interest. The only borrowing cost that is actually, it is the interest on the borrowing. That is, we are going to deal with interest on the borrowing, which some of it was actually incurred, some of it ended up having to be received. So in this case, the active period of construction was 8 months and the inactive period of construction was 4 months. So it means the only period we'll be able to recognize for interest here is actually the 8 month. So we can be able to, in this case, do our computations. So in this case, total interest, so we can have our computations here. So let's put shillings, let's put shillings in thousands, shillings in thousands. Let's do our computation, shillings in thousands. So the interest for the entire year, so total interest cost, so total interest cost for the entire year, it will likely in this case be 24 million. It will be 24 million. We multiply by 10%. 10%, which in this case, our friend has already told us is how much? 2.4 million. Remember, our figures are in thousands. So here it means it will be 2,400. 2,400 tukiweka in thousands inakuwa 2.4 million. So that is the total interest for the entire year. But remember, there was that interest for the active period and inactive period. So we have to, in this case, do what? Deduct in this case, the interest during the inactive period or during the period of what? Of dormancy. The period of dormancy and the period of what? Of inactiveness. So the inactive period was actually 4 months. So of course, for the entire year is 2.4 million. But tumesema the only interest we're going to capitalize is for 8 months. So lazima tutoe hii kwa hii total. It is not supposed to be the one for the 4 month. Remember, for the entire year, mwaka yote hizi zote mbili tukicombine inakuja 2.4 million. But the inactive period, we are not supposed to capitalize it. So lazima tutoe. So in this case, we less the interest. Less the interest during inactive period. Interest during inactive period. During inactive period, interest during inactive period, which is 4 months. So we will take in this case, of course, for the entire year, exactly 24 million. You multiply by 10%. But now we apportion 4 out of 12. What are you having to get when you do the computation? 24 million by 10%, then for 4 months. What are you having to get after you do the computation? After you do the computation, what are you having to get after you do the computation? After you do the computation, what are we having to get after you do the computation? 800K. So 800K. So in this case, we will less 800,000. We'll end up having to less 800,000, 800,000, 800,000, 800,000. So in this case, we'll get a borrowing cost. We'll get the borrowing cost here. The borrowing costs to capitalize. The borrowing cost to capitalize. In this case, you'll get the difference, which will come to 1.6 million. It will come to 1.6 million. 1.6 million. But we've been told that these funds, when they got them, they invested. And if you look at how I've been able to explain how you account for, in this case, interest, there can be interest you incur and there can be interest you earn. So they invested the money. They made some kind of like what you're calling investments, which they ended up having to receive get money, ended up having to get money. So you are told from the question, as the funds were not all required immediately, Sayari Limited invested 10 million in 6% bonds until 31st of May 2021. So until 31st of May 2021. So it means in this case, they actually ended up having to invest how much? In this case, invest for 5 months. They invested for 5 months. They invested for 5 months. So there was interest. There was actually interest that was actually earned for 5 months. But these interests, it is in 2 forms. Remember, the construction started in March. So kuna January. So they invested for 5 months. Let's just do it here. January, February, March, April, May. And the construction started on 1st of March. The construction started on 1st of March. 1st of March. In the explanation, I've already been able to indicate to you that in this case, if the borrowing cost happens to be 1.6 million, and of course, these funds were invested, on that interest that is earned, you're supposed to deduct it from here during the active period of construction. If there's any interest that was actually earned on these monies that were borrowed, which some of them were invested, na wakapata interest, hiyo interest walipata kama income, unafaa ukuje uitoe hapa. Ina reduce this borrowing cost. So you can see it is a benefit. We ulikopa pesa but ukainvest kwingine wakakurudishia. So the borrowing cost won't be more. It will be less kwa sababu ulikuwa mjanja. We ulieka mahali na ikaongezeka. So it will reduce this particular borrowing cost. So in this case, the active period of construction started in March. And the period upon which they invested the money was March, April, May. So it means the interest earned for these 3 months, because they invested the money up to 31st of May, the 3 months in hiyo pesa ilikuwa imekuwa invested, this interest earned during this active period of construction, you have to deduct it from here. Remember, saizi haulipi unapata. So lazima uitoe hapa to get the net borrowing costs. And if you look at the explanation, we've already been able to indicate, in any case, you invest money and you earn interest. That interest earned during the active period of construction should be deducted from the borrowing costs. Ukirudi hapo kwa notes hapo juu, hiyo ndio kitu tumesema. So hawa walipata hizo pesa 1st of January. Waka-invest part of it in this case, January, February, March, April, May. But January na Feb kulikuwa the period of inactiveness. So you're only having to say interest earned during active construction is the one that you end up having to deduct from the borrowing cost to get the net borrowing costs. So therefore, in this case, If you look at the question, they have already been able to tell you that in this case, we have here, as the funds were not all required immediately, Sahari Limited invested 10 million in 6% bonds until 31st of May 2021. So in this case, the interest earned in this case was actually, so we have to, in this case, less the interest earned, less the interest earned, less interest on temporary investment. So less interest on temporary investment. Less interest on temporary investment. So in this case, the interest on temporary investment, it will likely be 6%, multiplied by 10 million, multiplied by 5 out of 12. 5 out of 12, is it 5 out of 12? But in this case, remember, we are only going to take the period of active construction. So it won't be 5 months, it will be 3. So of course, we'll invest for, in this case, 5 months, but we'll only deduct the interest earned during the period of what? Active construction, which is how many months? It is not 5, Nanjala. It is 3. Hope you are getting this point. It is 3, March, April, and May. Hiyo ndio walikuwa nafanya mjengo hapa. Ilikuwa inaendelea hiyo mjengo. So hiyo interest wali earned during active construction ndio tutaless hapa. Ilikuwa for how many months? March, April, and May. It was for 3 months. The interest for the entire year is 6%, but you have to apportion. It will be 3 out of 12. The active month during construction, that interest they earn during the active construction. So in this case, it will be 3 out of 12. So we do 3 out of 12. Je, unapata nini? Je, unapata nini? Je, unapata nini in your calculator? Unapata nini in your calculator? 150K. Unapata 150K. Hiyo ni ukweli. Josephat. You need to confirm Josephat. So 3 or 4 people should be able to confirm hii figure tunapewa hapa na Nanjala. So 1.5. Mbuthia. Umefinya hiyo calc vizuri? Mbuthia. Ebu angalia Mbuthia, rudia Mbuthia. I adjust the board. Mbuthia ebu rudia. Rudia. Oh, sorry. Mbuthia says sorry. Mbuthia ameomba msamaha. So it is 150,000. So we'll end up having to less 150K, 150,000. So we'll less 150,000 from here. 150,000. Sijui kama mnaona hapo. Hata tumemaliza the answer, so you don't have to less 150,000. So you'll get now in this case the net borrowing costs. You'll get the net. So the figure you'll be able to get here is the net borrowing costs, which in this case will be, is it 1450? I think it should be 1450. Net borrowing costs to capitalize. Net borrowing cost to capitalize, it will be a figure of 1450,000, 1.45 million. So this is the amount that is supposed to be capitalized. Of course, that is what the examiner wanted. Explain with suitable calculations the accounting treatment of interest on costs on the loan, not in the financial statements of Sahari Limited for the year ended 31st of December 2021, in accordance with international accounting standards. So that is how in this case you'll end up having to deal with, in this case, what the interests on the borrowing, you'll end up having to capitalize an amount of 1450. So the net borrowing cost to be capitalized will be 1.450 million. And of course, if they are talking about the explanation, niyo nimekuexplainia in theory hapo juu. So unaweza andika hapo kidogo hapo chini. You say in this case, interest during the active period, it is to be capitalized. So this one is to be capitalized. This one is to be capitalized. It is to be capitalized. It is to be capitalized. It is to be capitalized. Then in this case, interest earned during the period of active construction, it is to be deducted from the borrowing costs, which is this one we've computed here. You less the interests on temporary investment during active construction, which was for 3 months. So of course for the entire year 6%, but the active period was 3 months. So we apportion like that. And of course we'll be able to get 150,000. We less it from the borrowing cost. So the interest earned on temporary investment during active construction should be deducted from the borrowing costs. And that's how you can be able to explain what your computation hapo. Your computation hapo. So hope that is very clear. 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 So we can be able to look at another question. Ya kufinish. Question ya kufinish. You can get September 2021. September 2021. Question number 4A. When you get the question, please let me know. September 2021, question number 4A. September 2021, question number 4A. September 2021, question number 4A. Try to get that one. So once you get it, just let me know. September 2021, question number 4A. So I can see Debbie ashaipata. Debbie ashaipata. Debbie ashaipata. September 2021, question number 4A. Nimeishare hapo kwa group. Hata unaweza download tu hapo kwa group. Nilikuwa nishaishare hapo kwa group. I had already shared it there on the group. So September 2021, question number 4A. Question number 4A. Kwani ni Debbie tu amepata? Wewe. Cheborogei. Wewe. Josephat has gotten it. Josephat has gotten it. This time Nanjala ni kama kimemumania. Nanjala, check on the group. I've shared it there also. Nanjala ni kama kimemumania. Yes. So you people, at least 4 people have already been able to confirm that they have gotten it. So it says Darubini Limited has provided the following schedule of long-term loans for the year ended 31st of December 2020. So we have a 10% loan note, which I think it is ending 2025, 12% bonds, which is the ending 2028. Then in this case, we have 6% debentures, which is ending 2024. So as of 1st of January, the loan amount was this, and 31st of December, the loan amount was that. Then additional information, the 10% loan note, kwa hiyo ameindicate hapo, hiyo 10% loan note and 12% bonds were used to finance the construction of a power plant, which commenced on 1st of January 2020. The expenditure for the construction was drawn with 100%, with 100 million being drawn on 1st of January 2020 and 75 million on 1st of July 2020. So the 6% debenture was used to finance the construction of a new storage facility. The construction commenced on 1st of January 2020, but no construction took place between 1st of March 2020 to 31st of May 2020 due to COVID-19 restrictions. The facility was available for use on 31st of December 2020, having incurred a construction cost of 60 million. In line with provisions of International Accounting Standard IAS 23, so that is actually borrowing costs, determine the borrowing cost to be capitalized for each of the projects as of 31st of December 2020. The value of the assets in the books of Darubini Limited as at 31st of December 2020. So of course, there are two projects here. There is one that they are having to, in this case, construct a power plant. So that is what you need to be able to note, Susanna. So Susanna, there are two projects here. So there are two projects here. There are two projects in this particular case. There's one that in this case, they are constructing, in this case, what? A power plant. Power plant. Power plant. This is what we are talking about, the qualifying asset. Unakumbuka tukianza nikaanza kuimba sijui qualifying asset. So one of the qualifying assets that they are borrowing this money to construct is a power plant. The other one is a storage facility. Susanna, it is a storage facility. Storage facility. Storage facility. So storage facility. And of course, they have been financed differently. They have been financed differently. So for in this case, for the power plant, hapa sasa umetumia loans mbili. Unakumbuka pale tukisema sijui Equity na KCB. Unakumbuka kwa story. Ako ka story kalikuwa hapo ka Equity and in this case KCB wanapeana funds kufinance projects moja. Sasa hapa ndio examiner anaelekea. Hapa ndio examiner anaelekea. So in this case for the power plant, it has been financed by the 10% loan note. It has been financed by the 10% loan note. Na pia it has been financed by the 12% bonds. It has been financed by the 12% bonds. And in this case, storage facility imefinansiwa na nini? Na debenture. Imefinansiwa na in this case na debenture, 6% debentures. 6% debentures. 6% debentures. 6% debentures. So in this case, it means since the power plant was financed by two loans, nilikwambia hapo kuna kakitu tuna calculate. Kanaitwa capitalization rate. You have to compute the capitalization rate. In any case, for example, a project or a qualifying asset is financed by two different loans. Na tumeona hapa sasa power plant, so unaona ilifinansiwa na mbili. Kulikuwa na hiyo loan note, hiyo 10%, na kulikuwa na hizi bonds za 12%. They were financing in this case what? The power plant. The power plant, the power plant in this case, the power plant in this case, the power plant in this case. So therefore, for this particular one, we have to come up with what we call the capitalization rate. Capitalization rate. So the capitalization for the power plant, so number one, for financing construction of power plant, for the power plant construction, we first of all have to come up with the capitalization rate. Capitalization rate. So the capitalization rate, which in this case, I told you to get the capitalization rate. Kuna ka formula nilikuwa nimekupea. Nilikuwa nimekwambia unachukua aggregate interest payable. You take the aggregate interest payable, and then in this case also you divide by the aggregate amount payable. So you just continue na kwa formula ketu, usikatupe hapo kwa formula ketu, uendelee tu nako. In this case 10% loan note umeelezewa hapo juu. So the 10% loan note in this case inamaanisha by the end of the year, if exactly in this case you are ending up having to borrow 300,000, so you can be able to use that particular information you've been given there up there to get the aggregate rate, the capitalization rate, sorry. So the aggregate interest rate in this case, it means it will be, so for the loan note, you can be able to take 10%, multiply by, in this case, 300,000. So then plus, for the bonds, it will be 12%, multiplied by 200,000, 12%, multiplied by 200,000. Then you divide by the total amount in this case, a total amount that will be payable by the end of the year. So in this case, it will be 300,000 plus, in this case, 200,000. When you do this computation, it should be able to give you the capitalization rate. So I want you to do the mathematics and tell me, what are you getting as the capitalization rate? What are you having to get as the capitalization rate? Aggregate interest payable. So from the data up there, you'll take 10% of the 300,000 to get the interest payable on the 10% loan notes. Then the interest payable on the in this case, the bonds, it will be 12%. Remember, the bonds are at an interest of 12% of that amount. You multiply by 200,000. Then you divide by the total amount payable, which is this principal amount, 300 plus 200. So what are you getting as the capitalization rate? As the capitalization rate? What are you getting as the capitalization rate? See, Debbie says 10.8%. Anyone else having to get that? 10.8%. Anyone else having to get that? Yeah, it is 10.8%. It is 10.8%. So that means that is what the capitalization rate. So that is the rate that in this case, we likely end up having to utilize in terms of having to compute, how much ended up having to be the interest, how much actually ended up having to be the interest on the amount borrowed. So you are told that expenditure for the construction was drawn with 100 million being drawn on 1st of January. So in this case, for the power plant, in this case, the expenditure here. So on 1st of January, they drew how much? 100 million. They drew 100 million. So it means for the 100 million, they likely end up having to accrue an interest of 10.8% for the entire year. So because you are told that the loan note like this, to finance the construction of a power plant which commenced on 1st of January 2020. So it means in this case, we'll likely be able to take that 10.8%, which is the capitalization rate, to compute interest on these amounts that were drawn, that were actually borrowed. So for 1st of January, they borrowed 100 million. So 1st of January 2020, they borrowed in this case how much? 100 million. 100 million. So this means it was at an interest rate of 10.8%. 10.8%. And therefore in this case, so the expenditure, or in this case, interest to be capitalized, expenditure or interest to be capitalized, it will be 100 million times 10.8%. So you'd be able to get an amount on the 100 million which they borrowed on 1st of January 2020. But there's another amount of 75 million which they never borrowed on at the start of the year. They borrowed on 1st of July. They drew the amount on 1st of July 2020. So this one only existed for 6 months. So it will be 75 million. You multiply by, in this case, 10.8%. But now in this case, it was only for 6 months. It was only for 6 months. For this year, we are looking at how the borrowing cost will likely be, in this case, be computed. So there's this 100 million, which was for the entire year, and the capitalization rate or the interest rate to capitalize to include as part of the cost of construction of this particular, in this case, power plant, will be 100 million by 10.8%. But there's another amount they borrowed or they drew on 1st of July, which only existed for 6 months. July up to December is only 6 months. So 75 million multiplied by 10.8 multiplied by 6 out of 12. So I need you to give me the figure you're having to get here. So I think this one you'll get, is it 108 or 108 or something? 108 or 10, or how much? How much are you having to get when you compute 10.8% of 100 million? How much are you having to get? 10.8% of 100 million. I can see you're saying 10.8 million. So 10.8 million. So it will come to 10.8 million. 10.8 million. 10.8 million. So I can see you are saying 10,800,000. What about this one on 75 million? 75 million on by 10.8 by 6 months. How much are you having to get? 4.0, 4 point, so 4.05 million, 4.05 million, 4.05 million, 4.05 million. And therefore, in this case, it means the total amount to be capitalized as interest as part of the construction of this particular plant will be the total of the two. Will be the total of the two. So what do you get when you total the two? In this case, I think you should be able to get, is it 14.85 million. So the amount to capitalize as the borrowing cost. So this is the borrowing cost to capitalize. So the borrowing cost to capitalize for the power plant, it will likely be this amount, which is 14.85 million, 14.85 million, 14.85 million. So that is what they require. So the borrowing cost to be capitalized for each of the projects. So for this particular project of the power plant, this is the amount they are supposed to capitalize. But remember, if you've sourced funds from two different sources, you need to calculate. Remember this, the capitalization rate. And this is the formula. The formula. So ukipewa two loans, hivyo ndio unapata the capitalization rate. Then you apply it on the amount borrowed to get the borrowing costs or the interest on the amount borrowed, which will be the borrowing cost to capitalize or to include it as part of the cost of construction of a qualifying asset. So that is how in this case you get for now, in this case, the power plant. But now in this case, there was the 6% debentures which they borrowed to, in this case, construct what? A storage facility. So now in this case, we've done with the power plant. The other project in this case is exactly what? The storage facility. So let's look at the storage facility. Storage facility. Let's look at the storage facility. Let's look at the storage facility. Storage facility. Storage facility. So now in this case, we have what? The storage facility. We have the storage facility. So this is project number 2, storage facility. So for the storage facility, 6% debentures were used to finance the construction of a new storage facility. The construction commenced on 1st of January 2020, but no construction took place between 1st of March 2020 to 31st of May 2020 due to COVID-19 restrictions. So of so much importance, please tell me, what was the active period of construction? Active period of construction. Please tell me, what was the active period of construction? What was the active period of construction? Susanna. What was the active period of construction? According to that statement there. How many months? I want you to tell me how many months were for active construction during the year. I can see Ruth Nanjala says 9. Is it really 9? Is it really 9? Is it really 9? Cheborge says 9. Irene Onyango says 8. Interesting. Or Irene Onyango, is it 8? Why are you saying 8? Any other person, a fourth person, able to indicate there? I can see Mbuthia Hilda says 9. Susanna says 9. So Irene, confirm. It is supposed to be 9 months. Irene, confirm. It's supposed to be 9 months. Irene, umehesabu vidole vizuri kweli? Umehesabu vidole vizuri kweli? Vidole. January, February hivyo. But kuna month fulani hapo COVID ilikuwa imechacha. So people are not supposed to meet. 2020 so unakumbuka kitu ilifanyika. People are not supposed to meet. They are supposed to keep social distance. Now wali keep social distance from when? 1st of March paka 31st of May. So March, April na May. Hakuna kitu ilikuwa inafanyika Irene. Hizo ni miezi ngapi? 3. So it means in this case, the active period of construction was actually only how many months? 9 months. Remember, what have we said? Interest accrued only during the period of active construction of a qualifying asset is what you'll end up having to capitalize as the borrowing cost. So it means in this case, when you're actually ending up having to compute the interest, we'll only be able to consider only interest for how many months? 9 months as the amount that is actually supposed to do what? To be capitalized. That is actually supposed to be capitalized. So the active period of construction was actually in this case 9 months. Na mmeona vile hiyo 9 month imetokea. 9 month imetokea. So inactive period, it was actually, in this case, the month of March, the month of April, and the month of May, So when you are computing the borrowing cost here, we'll take 6% of the value of, in this case, the amount that was actually supposed to be borrowed, which is actually 60 million. Then in this case, we multiply by 9 out of 12. 9 out of 12. So interest to be capitalized, interest or borrowing cost to capitalize, borrowing cost to capitalize, will actually, in this case, be, remember the debentures were actually at 6%. So it will be 6% multiplied by 60 million. You multiply by 9 out of 12. So what are you getting? When you do that computation, what are you getting? What are you getting? What are you getting? If you do that computation, what are you getting? Irene, what are you getting when you do that computation? Ukicheza na calculator inakuambia nini? Ukicheza na calculator inakuambia nini? Ukifinya calculator inakuambia nini? What are you getting? Susanna, Mbuthia, what are you getting? What are you getting? When you do that computation, what are you getting? I can see you're saying 2.7 million, 2.7 million. So these are actually the borrowing costs to be capitalized on the storage facility, And then part 2, determine the value of the asset in the books of Darubini Limited as of 31st of December 2020. So the value of the asset. Remember, in this case, tumesema, to determine the value of the asset, you are supposed to do what? Capitalize the borrowing costs. You are supposed to include on the cost of the asset the borrowing costs. So the value of the asset by the end of the year, tutakuwa tumeongezea hizi borrowing costs. And therefore, kama hii haitakuwa 60 million, utaongeza hii akia nani? Utaongeza hii. Of course, ilikuwa ina cost 60 million, but kulikuwa na loan tulikuwa tunalipa, sasa ile walikuwa na jenga. Lazima tuongezee hii. So hii itakuja 62.57. Na hiyo ingine pia tutaongeza that amount. So in this case, we can get the value. So part 2, wacha tumalizie Roman 2. Nikufinish hapa. Nikufinish Roman 2, the value of the assets. The value of the assets by the end of the year. The value of the assets. The value of the assets as at 31st of December 2020. So in this case, there are two assets here. We have, in this case, the power plant. Na kuna storage facility. Kuna storage facility. We have the power plant na kuna storage facility. So in this case, for the storage facility, so the amount invested in this particular project, or sorry, for the power plant, the amount invested, we had 100 million na tulikuwa na 75 million. Unakumbuka? 100 million na 75 million ndo ilikuwa borrowed. So it was an amount of 175 million. So our shillings are actually in millions. You can put it here. Our shillings are actually in millions. And of course, now in this case, the amount invested in the storage facility was 60 million. But now the borrowing costs, which is also capital. So the capitalized borrowing costs. So for the power plant, tulikuwa tumecompute, tukapata a value of, was it 14.85? So it's 14.85 million. Na hii tumepata a value of 2.7 million. So the value of the asset, in this case, value of asset yenye utapeleka kwa balance sheet sasa, hapa itakuwa 189.85 million. 189.85 million, na hapa itakuwa 62 0.7 million. And of course you would have finished. Utakuwa umemaliza. Utakuwa umemaliza. Utakuwa umemaliza. Utakuwa umemaliza. So that is the value of the assets, the value of the assets to the value of the assets by the end of the year. So we've included the capitalized borrowing costs. So the borrowing costs have to be capitalized. So tumesema kama ulikuwa na need 10 million na ukakopa pesa, ile interest ulikuwa inainkaa ukijenga hiyo qualifying asset lazima uongezee. Ndio upate the value of the asset to take in the balance sheet by the end of the year. 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 So so you can write an NB, which is the very final thing. NB, write an NB, write a note and say, write a note and say. The interest not capitalized, the interest not capitalized, the interest not capitalized, the interest not capitalized will be expensed, the interest not capitalized will be expensed directly in the books of accounts as an expense. The interest not capitalized will be expensed directly in the books of accounts as an expense. Will be expensed directly in the books of accounts as an expense. As an expense, of course, which I had already explained earlier. Will be expensed directly in the books of accounts as an expense, as an expense, as an expense, as an expense. So that is how, in this case, you deal with the borrowing costs. And of course, that is the end of that particular area of borrowing costs. So in our next class, we look at another area. We look at another area. So we might look at professional firms, or we might look at accounting for cooperatives. So we'll start with these easy ones. So let's meet on Thursday. Let's meet on Thursday. So maybe I can give an exercise. This area was tested in this last sitting. Let's see. It was which question? It was tested in this last sitting. Let me give an assignment. Let me give an assignment. Let me give an assignment. Just a minute, I give an assignment. So I'm going to share the assignment on the group, so I'm not able to access that past paper right now. For this previous sitting they did in December, they tested on borrowing costs. So so let's end there, unless there's a burning question. So let's just end there for now. Otherwise, I wish all of you a good evening. Have a good night. Let's meet on Thursday. We'll be looking at another area in financial reporting. Asanteni sana.